when you don't create wealth as quickly or as safely as you should, then you have to defer the things that you really want to do with your lifestyle, like upgrade your home or send your kids to private school. You don't want to be going and adding a super cash flow focused property when you're still in the growth and accumulation mode, as far as I'm concerned, unless you need it to balance out and help your borrowing capacity, or you want to balance out the negative gearing on your portfolio. Why I originally started Investor's Edge is I had 4 properties. All of them were being mismanaged. All my managers were shocking. I tried looking around for good managers. None of them had an investment mindset and treated the property as if it was their own because they didn't know what it meant to be an investor.
Welcome to Perth Property Insider, where you will learn how to grow your wealth and improve your life using Perth property. Our show is brought to you by Investor's Edge Real Estate, the highly rated and award-winning property management, sales and buyers agency servicing the whole of Perth. Now, here's your host, Jared Mann.
G'day and welcome to another episode of Perth Property Insider. Today, I'm going to run through the most common 4 mistakes that I see property investors make that are holding them back from greater wealth. And it's not just the financial cost, it's the peace of mind, the stress and the extra hassle that comes from making these mistakes as well. And ultimately, it's affecting how rapidly they can upgrade their life as well. So when you don't create wealth as quickly or as safely as you should, then you have to defer the things that you really want to do with your lifestyle, like upgrade your home or send your kids to private school. And I think our generation would want to live their life better along the way and not save all these things for a rainy retirement day that may be far off, distant, 20 or 30 years away. So getting these things right can have a massive impact on your lifestyle along the way. And that's why I really want to see people try to get them right. Now, when it comes to solving these things, we've created what I call our Investor's Edge Wealth Blueprint. And I've thought long and hard about these mistakes for many years, and it's how we've gone about designing our services to really prevent the mistakes from happening, to solve them, and to make sure that people are on that right track for creating wealth safely, effectively, accelerating how they do it. So the first mistake I see people make is failing to have a strategic plan. And what it results in is aimless investing. So the ultimate consequences of this is a lack of direction. You miss targets. You may not even have any targets. You get ineffective wealth growth because you're not optimizing and making changes. You might have some of the wrong assets in there for the goals that you're trying to get to. You can be sitting on your hands when you should be moving forward. Sometimes you can be buying too many properties when you should be sitting on your hands. I see the wrong types of properties in terms of their mix of growth and rental yield being added at the wrong times. I see the wrong sequencing of when people upgrade their homes, and sometimes because they've waited too long, they can't even afford to get into the home that they could have got into if they'd, say, taken a more strategic approach, such as upgrading sooner, perhaps renting it out for a period of time until they can afford it better, then switching that across to their principal place of residence later. So all of these things can be sequenced, can be modeled out with powerful software. And what we've done to solve this problem is we've created what we call our strategic portfolio plan. So we combine advanced modeling software with decades of experience to map out that path to your goals and give you the clarity to proceed with confidence. And it just makes such a huge difference. So I'm completely guilty of this mistake and each of the mistakes that I'm going to cover today. It's why I know them so well. So when I first started out on my investing journey, I was just focusing on, okay, my budget's this. I'll go and buy a property for using that complete budget. I never thought about the next steps after that. I was just so blindly focused on trying to chunk up money and solve my problem of not having deposits or much money to do much with, I was very all over the place with doing renovations, selling properties, doing small subdivisions and development. I ended up buying a lot of the wrong type of properties. I had too much negative gearing for what I could handle early on. And I ended up, making a lot of mistakes that were costly because when you have transaction costs and you have capital gains tax to pay, when you're doing a lot of buying and selling and making a lot of effort with adding value, the hidden cost of all that is what you're actually left with after you pay all those expenses, the transaction costs, the capital gains tax, and equate for the value of your time as well. So on one hand, it kind of helped me chunk up money, but then I looked back and looked at what the market had just generally done over that time, and I would have been better off with a more passive investment that was more holdable for the long term. And that leads nicely into the next mistake I see people make, which I have certainly made, is either emotional buying of a property or buying without experience and a data driven analysis. So it ultimately leads to poor property choices. And a big part of this as well can be buying the wrong type of property that fits into, it doesn't fit into your plan properly. So you don't want to be going and adding a super cash flow focused property when you're still in the growth and accumulation mode as far as I'm concerned, unless you need it to balance out and help your borrowing capacity, or you want to balance out the negative gearing on your portfolio. But for most people, it makes sense to focus on growth assets first, build that asset base, then transition across to more income focused assets. And even though we're focusing on growth, we don't want to go too towards the higher priced growth end at the sake of cash flow and then not be able to afford to hold the property. And so you really need that cash flow position of the property to be comfortable, affordable, allow you to keep saving and progressing with paying down debt as well. And so that's why this buying of the right property relates back to your plan. Now, some of the consequences of this is having poor investment performance, lower returns than what you could have otherwise had, and higher risk with such things as vacancy or legal problems or attracting the wrong type of tenants. So we've really solved this with our buyer's agency service, focusing on buying high performing property. We use what we call our trifecta criteria to assess the growth, cash flow, and livability of the suburb area and property. So that's the trifecta at both levels, at all three levels. And we want to ensure that you're going to buy a property with confidence, not with emotion, that best positions you for future growth. And we don't want to trade off medium and long term growth for short term growth. So it's all well and good. Some of these buyers agents just go and buy in the hottest spot that they can find that's going to give the strongest 1 year growth. If you check back in 5 and 10 years, what you're really hoping for is a high average annual growth rate over the medium and longer term, because it's the compounding that really adds up. So I'm not suggesting that you compromise the short term. I'm suggesting a well balanced approach between strong short term growth predictions and then strong fundamentals for the medium and long term. So that's going to give you the best chance of consistent growth over all three time periods. And you want the upfront growth, and that's an obvious one, because then it gives you a chance to recycle out your deposit that you've put in, to insulate yourself as well, so that if you did have to ever sell, when you get out, you've already covered your entry costs and your exit costs. And so that's really a first milestone, to have the insulation factor sorted so that you're protected and you're not going to lose money if you ever have to get out, if your situation changes or something like that happens. And that also relates back to your plan too. So you want to have decent savings buffers and not ever be forced to sell a property other than strategically choosing when to do it. A lot of people come in things being, they've put so much into the property that things are so tight that they can't even afford a hot water system breaking or a couple of weeks vacancy to find the tenant at the beginning because they've put every single last dollar into the property and they're running on empty. So that really relates back to your plan too, the selection of the property to preserve some of that money for savings and buffer and risk management, and really making sure that you're going to buy a high performing property that gets you that short term growth and then the consistent longer term, medium and longer term growth so that you get that compounding. So that was our second mistake, buying the wrong property.
Just real quick before we continue on with the episode, are you getting my email updates yet? If you're not, you're missing out on our suburb intelligence reports, which we tailor and prepare for your individual suburbs of interest, showing advanced stats and insights. Must get onto those. And I also send out exclusive invitations to our events, including webinars, sundowners, and workshops. So if you're not getting those, head on over to investorsedge.com.au/join and make sure you're receiving my email updates.
Our third mistake, which I've made as well, is that I see people neglecting property management results or neglecting their property management, which results in tenant issues and financial losses. And the consequence of this is just stress, poor returns, and ultimate property devaluation or needing to spend a lot of money to get their asset back up to where it should be. So every month, we have at least 20 people coming to us for stress-free property management experience that we provide. And they're coming from a property manager that doesn't return their calls often, doesn't return their emails. They're having to manage that manager. They've had issues such as vacancy, damage to their property. They've had really bad tenant experiences where they've had to evict tenants that should have never even been placed in the properties. We've got what we call our extreme screen approach, where we go in and qualify tenants to the nth degree and really leave no stone unturned to ensure that we can then put our quality tenant guarantee around that tenant. And that protects our clients because if we ever have to evict them, we cover the cost of replacing that tenant for free. And we also then really give people peace of mind because we've got our rented quickly guarantee where we're placing a tenant within 21 days, limiting that vacancy, or we give them 3 months management fees free. And then to solve the other problems that come up around poor service and poor management, we have our ridiculously responsive guarantee where we return all calls and emails on the same business day, or we pay you $100. And I've dreamt that one up about 15 years ago when I was in the shower. And it really came from the experiences I was having with my property managers to begin with. So why I originally started Investors Edge is I had 4 properties. All of them were being mismanaged. All my managers were shocking. I tried looking around for good managers. None of them had an investment mindset and treated the property as if it was their own because they didn't know what it meant to be an investor. So I got to the point where I was nearly going to sell all my properties and just get out because it was all too hard. And that's when I met Denise, my business partner, who was an exceptional property manager at the time. And she said, hey, if it's so hard to find a property manager, then why don't we start our own property management focused business? And that's where Investors Edge was born. I never saw myself really wanting to be a property manager. And I don't deliver that part of the business hands on myself, but I've got an amazing team and we wouldn't have over 1,000 clients and over 1,000 5-star Google reviews from tenants, owners, buyers and sellers if we didn't have such an awesome system to give people a stress-free property management experience and an awesome team to deliver on it. So I often see that because investors can equate a rental property to so much extra stress and headache, that's often why they limit themselves to 1 or 2 properties, because adding another property, it's going to be more headaches, more stress. That's why you need really great property management so that you can grow a portfolio without all the stress. And the other reason that I see people limit themselves to those one or two properties relate back to those first two mistakes. So they don't have a plan to begin with to buy more than one or two. They don't realize how many properties they actually need to set themselves up and have the wealth that's going to change their life. And then they go and buy the wrong properties. So they get stagnant growth. They get stress from the properties. They're attracting shit tenants, excuse my language, and they're hard to rent and hard to resell. And overall, it significantly holds them back from growing a larger portfolio because they don't get that equity uplift as quickly as they should to be able to leapfrog that into adding other properties and relating back to their overall plan that they don't have. So you can see how all these things start to work together. And it leads me into my last mistake that I see property investors so commonly making. And it's even more common now at the moment that people actually have some decent equity in their properties. So they've gone and held their property through our boom period so far. They've got some fabulous equity. Comes time to sell for whatever reason. And I do spend a lot of time speaking people out of selling and making sure that they've got a whole strategy around why are they selling. You know, some great reasons is to upgrade your home, to consolidate debt if you're in that stage of life, to start to prepare for retirement if you're in that stage of life, or that you've bought a poor performing property. And if we hold on to it and the market slows down or the music stops and you're left trying to sell or rent that during a much softer market, then it can be much more incredibly difficult and you'll wish that you had have sold it when the market was hot. So, common mistakes I see here is selling without a strategic sale plan reduces the profit that you're ultimately realizing. And the consequence of this is getting a lower sale price. You have longer time on market, so that can be stressful and cost more too. And it ultimately sees that you miss the extra opportunities for what you could have spent the money on. Now, when people are selling, they might have thought, yeah, I got a good price. The agent seemed to do well, but there's some really hidden costs that you don't see as to how much better the sale price could have been if you'd taken a strategic sale approach. Now, I'm best known for coming in and setting record prices in suburbs wherever I sell. And I'm doing that with my strategic sales system, my 5-point strategic sales system. And it makes such a huge difference to the end selling price that I just, even in this hotter market, it makes an even greater compounding difference because we can make the most of that demand that's there. So it really just excites and gives me so much buzz to make sure that when a client is finishing up with their rental property or upgrading their home and needing to sell that I get them the very best price possible to help those next dreams happen and come true. And that's what ties back into my overall goal of helping people improve their lives. So, selling for maximum return is the last step of our wealth blueprint, and it's critical to get the best price possible when you're selling and do it strategically so that you're timing it around the lease, around the market, and looking at an overall strategy for pushing the price up and getting a more emotional price from the market. It's really about getting those profits that you deserve from holding on to the investment for so long. Or it could have even been a short time, and getting as much as possible to make your next steps become more achievable. So that's the Investor's Edge Wealth Blueprint. We go from creating your strategic portfolio plan, buying a high-performing property, experiencing stress-free property management, and selling for maximum return. So if any of these things have struck a chord, check out our website, investorsedge.com.au. Reach out if we can help. And hope you haven't made too many of these mistakes so far. I know I've made all of them. When I think of that last one about not selling strategically, I had a property that was the wrong property that I owned over in Queensland, and I held on to it too long. I wasn't aware of, this is 15 years ago. I didn't know how to read the market, didn't have analysis, data-driven analysis, and the kind of analytics that we have these days. So when the market stopped, the property was costing me so much per week that I just had to, it was eating up my savings. This is around the time that I just started Investor's Edge as well. So I was tipping a lot of money into the business and still getting up to speed on things. And I had to make the decision to sell it during a down market. And because I wasn't local, the agent was just very transactional. They just threw it on the market. I didn't time the lease end date to allow home buyers to look at buying it as well. It just sort of came that I had to sell it. The time was now. Presentation was shocking from the tenant. The lease sort of prevented home buyers purchasing it. The market timing was all wrong, so the demand wasn't there to push things up as well. The agent, in the end, they gave me a lot of promises, but then they had a junior person doing a lot of things that didn't do them effectively. I was chasing them. I found myself locked into a 3-month contract. That's another thing that I have no lock-in contracts. So if I'm not meeting my promises, you don't have to continue, or you never have to. You can walk away at any point prior to the sale. And overall, I then had to pay them a selling fee for doing a really crap job. And that's one of the final other guarantees that I have on my sales side, that if you're not absolutely satisfied, you can choose to pay me nothing for your property sale, or pay me what you think I'm worth. And I have agents all the time asking me, Jared, aren't you worried that someone's going to not pay you for selling their property? And I'm not, because my strategic sales system is really going to ensure that we get that best price for the person. I've never had anyone not pay me so far. And I say to them, aren't you worried you're going to make a seller pay you when they don't see full value in what you're charging? So this really just, my absolutely delighted guarantee really ensures that I'm delivering maximum value for what I charge. And it helps me sleep at night, because my interests are aligned with our sellers. And when I go about and get the best price, there's no doubt that I've been worth it. So 4 mistakes. We've got our 4 solutions that are part of our Investor's Edge Wealth Blueprint. If we can help you with any of those areas, reach out and get in touch. And if you've enjoyed this episode, like and share it, post a comment about whether you've made any of these mistakes too, so that I don't feel like I'm alone. And I guess what comes with the experience and time is I think any investor that's been doing this a while will be able to look back and say, yep, I've made some or all of those, but it also shows then how much we've grown when we can recognize that, and how much we've improved our approach to now investing in the meantime. So anyone that says they haven't made any mistakes probably hasn't been doing this that long. But if you are just starting out, what I'm trying to do is help prevent you from making these mistakes. And if you make right choices, they're going to compound over time, where you don't have the setbacks, you don't have the delay and the wasted time that takes you off track. And I think that's the biggest thing that we can do for our clients, is help them make right choices that compound. So on that note, thanks for tuning in, and I'll catch you on the next one.
Just a reminder, the information discussed in this podcast is general in nature. As we don't know your specific situation, you should always seek professional advice before taking any action. For free market reports on your suburbs of interest and other helpful resources to grow your wealth, make sure you join my property investor update at investorsedge.com.au/join. And finally, make sure you're a member of our Perth Property Investment Facebook group to be part of the conversation with other like-minded investors, get help to your questions, and get a feel for what's going on out there in the market. I'll see you in the group.